Good afternoon. Thank you for listening to the Hecla third quarter 2024 webcast. I'm Krcmarov, President and CEO. First, I want to express my excitement and gratitude to be the new CEO of this 133-year-old company. Hecla has a long and rich history of being a leader in the silver mining space, with silver assets that are among the best in the industry when considering all of their attributes. The value of a mining company rests on two key pillars: the quality of its team and the strength of its assets. Hecla is fortunate to have both. Our assets are world-class, with reserve lives exceeding a decade in every mine and nearly 2 decades at Lucky Friday. These silver mines are among the highest grade in the industry, really setting us apart from our peers. Equally important is Hecla's culture of innovation. We pioneered and implemented the underhand closed bench mining method at Lucky Friday. We also boosted throughput and recoveries at Greens Creek and integrated generative AI into our drilling programs. This culture extends to our commitment to ESG practices, which is crucial for maintaining our social licence to operate. A standout example is Keno Hill, where a year ago we prioritised the safety of our employees, contractors and the environment over production. We remain committed to responsible operations, valuing input and collaboration from the Yukon government and the First Nation of Nacho Nyack Dun. With strong exploration success, we're invested in the long-term future of this operation and in fact of the entire district, building on our foundation of stakeholder engagement and continuous improvement in safety and environmental practices. Lastly, one of our most exciting attributes is our exploration potential. Beyond our active mines, projects like Midas and Aurora in Nevada and Libby exploration in Montana, they could create lasting value for our shareholders. We look forward to organic growth by maximising the value of our extensive portfolio and in particular ensuring that Keno Hill follows a measured path to optimum production and profitability. Moreover, there will be a renewed focus on cash flow generation at all of our assets and not production maximisation. We've previously provided our priorities for capital allocation during the year, and similar to the second quarter, we've made progress on these priorities during the third quarter. Investing in Keno Hill and our operations is the first priority, and we continue to execute it. We saw an opportunistic market environment and issued equity under our ATM program to pay down our revolver. At quarter end, we had $13 million drawn on the revolver and $22 million in cash on hand, giving us a net positive cash balance of $9 million. With a deleveraging from our revolver and an improvement in our adjusted EBITDA, we've also seen our net leverage ratio improve to 1.8 times. 44% of our revenue was derived from silver, and another interesting development in the quarter is we've been able to transition the copper contained in Greens Creek high-grade silver concentrate to now being a payable metal. We continue to see strong margins at our Greens Creek and Lucky Friday mines, which were 48% in the third quarter. Greens Creek produced 1.9 million ounces of silver. Throughput of 2,314 tonnes per day was lower due to the 5 days of unplanned SAG mill maintenance where we had a failure of the variable frequency drive. Despite lower production in the quarter, revenues were higher compared to the second quarter at $117 million as we drew down on the prior quarter's silver and zinc concentrate inventory build. Costs remained stable with strong free cash flow generation of more than $100 million to date. Lucky Friday produced 1.2 million ounces of silver. Production was lower quarter over quarter due to mill throughput and lower grades. Free cash flow generation was $23.2 million in the third quarter, with $69 million generated year to date. Casa Berardi produced 21,000 ounces in the third quarter at all-in sustaining costs of $2,059. Underground operations are expected to cease in mid-2025. We've made significant progress in transitioning the mine to a surface-only operation, where we've moved 62% more surface ore and waste tonnes during the first 9 months of this year compared to last year. The mine has a long reserve life ahead of it, and we have more work to do at this mine as we evaluate the mine's fit into our overall portfolio and other potential strategic alternatives. Keno Hill produced approximately 600,000 ounces in the third quarter, with year-to-date production of 2.1 million ounces. Mill throughput for the first 9 months of the year was 314 tonnes per day, but fell to 261 tonnes per day in the quarter, as the mill was not operational for about 35 days due to delays in receiving an authorisation for construction and a permit for the dry stack tails facility, as a result of the heap leach pad incident at the Keno Hill gold mine in late June. Ultimately, all authorisations were received and we completed related design and construction work at the facility, and the mill restarted operations on October the 26th. We have mined 2.5 million ounces of silver, including an ore stockpile of nearly 500,000 ounces. The geological environment at Keno Hill specifically, and in the Yukon, is world-class, and the Yukon government, the NND and all other external stakeholders have historically been supportive of mining. We value the perspectives of the First Nations and the Yukon government, and our ability to successfully operate in the Yukon is premised on environmental stewardship, responsible mining practices and sustainable mining for the benefit of all stakeholders. We are prioritising stakeholder outreach in the near term and expect that our 2025 production at Keno Hill will remain at 2024 levels. We are lowering our silver production guidance for Greens Creek and Lucky Friday and affirming Keno Hill's silver production. We're also increasing Lucky Friday's cash cost and all-in sustaining cost guidance while reducing Greens Creek cost guidance. Overall, our consolidated silver and gold cost guidance remain unchanged. Capital and exploration guidance is affirmed, and I look forward to engaging with you, and thanks for watching.